And my next guest says this negotiation is ultimately a fight about the Big Three's transition to EVs. They have a lower labor footprint than traditional combustion engine cars, could result in job cuts. Already, the legacy automakers are paying workers about 20% more than Tesla per hour, a gap that'll widen when a wage increase is ultimately agreed to. But could this actually also pressure Tesla to raise its wages or even cause its workers to unionize? Let's bring in Dan Levy. He covers autos at Barclays. Dan, really appreciate you stealing a couple seconds away from the Ford call. Listen, bottom line it here, especially after hearing some of those comments. Do you think that these shares will be under more pressure in the weeks to come?
Hi, Kelly. Thank you so much for having me. You know, our view on the way the strike has been impacting the stock prices is that a lot of this was already being priced in from a profit standpoint. The impact right now is transitory. Right now, we think it's roughly for Ford and GM, $80 to $90 million per week of lost profit from production, but they can make that up. Really, the question remains around how much cost they will ultimately absorb. We think for now, the stocks are okay. If this continues to extend for some time, there could be additional pressure. But again, the key question for the automakers is how much cost will they ultimately absorb given the challenges they have in the future on EV transition.
Right. I mean, again, colleagues of yours, Dan Ives over at Wedbush, thinks it could be pretty fatal. I mean, he's not very optimistic about it, certainly if the full demands are agreed to.
Yeah, they certainly won't agree to the full demands. That's not going to happen. And we actually think that the way that the negotiations are shaping out, some of the things like wages, COLA, we think there actually will be resolution on that. Really, the key question in our mind is around product allocation, job security. The automakers are seeking greater flexibility. UAW is seeking greater job security. As we noted, the Marshall battery plant that, you and Phil just referenced, that's really one of the questions here is, do those plants unionize? What happens in an EV world? We think that the automakers are going to need to seek flexibility, given there will be likely a labor impact as you move to an EV world.
Finally, how are GM and Ford going to compete? They already have a $65 an hour labor cost, where Tesla's is $45 to $50. Will they be successful in bringing Tesla's up? Because otherwise, their cost is about to go even higher.
We think their costs will increase. This is naturally going to happen, not only across Tesla, but probably across the transplant OEMs. I think this is naturally the case. Can they unionize? We've noted in the past it's been a tougher effort by the UAW, but and that in part has been because Tesla has benefited from paying its employees with stock comp. With the stock now where it is, that may not be the same types of benefits in the future. So wages are going to go up at Tesla. I think for them, though, and this is the case for all of the automakers, it's a constant battle on all aspects of cost to offset these different inflationary pressures, including on wages.
Dan, we will let you get back to it. Thanks for stealing away. Really appreciate it today.
Thank you.